What's up, traders? Welcome to this week's episode of the Weekly Watchlist, where I do a technical analysis and give you my thoughts on the tickers up here on the left. So as always, we have our broad market, we have our core list of companies, and this week I've actually got 11 trade ideas to share with you towards the end of the video, so definitely stay tuned. There's a lot to talk about. We had FOMC with some later comments coming out on Friday morning, as well as the quad witch happening late on in the week, so let's go ahead and jump into the broad market. Jumping right into the SPY weekly chart, talking about candlestick structure and location as we always do. We finally have something different to talk about, right? We had all of these hammer candles, these lower wicks that we've been discussing for the past month and a half, it feels like, and now we finally have a bearish engulfer. So sellers definitely were able to close strong here towards the lows after the buyers made a very, very faint new high. One thing I want to point out is that it certainly engulfed prior week's range, the week before that, and the week before that, of course. So this is a slight edge to the bears here. If we use location as a metric next and do something like this, you know that we've been using this red hammer candle here as sort of a measuring stick for the past couple of weeks. We've divided this range into thirds, so that was actually a poor split. Let's do something like that, and then something like that. There are our thirds of the range, and we finally closed in the middle as opposed to spending much of our time in the upper third, which to me is more neutral than all-out bearish, right? On the weekly perspective, whenever you see this, a selling week, something that feels like hot and heavy selling, like the market's collapsing, always zoom out, give yourself some perspective from the weekly time frame. What you'll notice is if we draw our trend lines in, right, something like this, not even close, right? If we anchor from here and use this as a first touch right there, these wicks didn't come close, and we're just barely starting to get into it now. We can even zoom out, right, way here to the low from the prior March, something like this, do the swing out method. Before this week would have printed, obviously, our first touch would have kind of been right in here, getting a touch from this, as well as these two lower wicks here, and you'll notice we're just barely starting to break this trend line to the downside, but we're still, overwhelmingly at the highs of this overall run. So don't get overly bearish just yet, just because we are starting to trade lower. There are some structural things that need to happen first. Let's go ahead and zoom into the daily and get some levels. All right, so on the daily time frame to find tradable levels for the upcoming week, the obvious thing that we need to discuss is, of course, the failure to hold the 50 SMA here. And, of course, this is a more bearish close underneath the 50 as opposed to other touches we've seen in the past, right? Just note the close here, strong at the lows on high volume down below versus other interactions we've had with the 50, right? These two in the most recent rearview mirror, lower wick was put in. This one never violated, but a lower wick was put in. We'll scroll back further. Lower wick was put in. Here, certainly a stronger close underneath, but look at the lower wick that was put in, and following day, large lower wick went on a nice run from there. So what I'm getting at is the close here underneath the 50 appears to me at least a lot different than what we've seen in the past. It looks weaker and certainly looks like we could go lower. So because of that, we will cover downside targets first. Obviously, gap fill play here down to 411.71, top of the gap, fills down to 411, the whole dollar after that 410.50 is your critical support, as we know from this prior area of consolidation and balance, right? That's where that 410.50 is coming in. If we were to get there on, say, Monday on hot and heavy selling activity, I would look for a small dead cat bounce there, especially seeing, the distance that we've traveled. This would not be a place that I would short on the first touch, rather look for that first touch bounce instead. On the case where we do consolidate underneath, I would argue the 50% mark of the range, and range being defined by this box here, so just drawing it in roughly something like this. If we were to consolidate under 414 after the move lower, so thinking in terms of scenarios, if we do this, get that first touch bounce and consolidate down here, then I would look for the short underneath 410.50, potentially targeting that 407 from support back in here, prior highs as well, right? Look left, and then the top of the gap down here at 403.40. That's the worst case scenario, in my opinion, for the upcoming week if we see that continued sell side activity. Potential gap fill obviously is down there to about $400.67 if we do accept into that gap underneath. The other scenario, of course, is that we don't set a new lower low early on in the week. Say we hold this low set on Friday, your potential is for consolidation here inside bars in this overall range. So, anything from about 1492, call it 415, the whole dollar, to consolidate up towards the top of the bottom of the gap, right at 417.83. You consolidate here. If you do take that out, just look for the gap fill up to about 419.35 and potentially a choppy move into this area here, something like this into the end of the week, maybe moving up there to 423.22, prior highs from in here, resistance from in here, then turn to support. So a lot of interaction around this level here, but basically, favoring the downside, right? It's choppy to maybe sideways to the upside, but certainly favoring the downside. And the reason for that, if we just think in terms of psychology, is anyone who tried to get long in this area of the chart, right, as people were accumulating, potentially, looking for this breakout higher, they never really got paid, right? Here's your breakout point. We only moved maybe, what is that? Maybe $3 over the highs there. It certainly wasn't the breakout that many were expecting. It was very lackluster, very choppy. So all of this overhead supply could potentially unwind, which is another reason why we are targeting lower early on in the week. Jumping over to the Qs now, you can see that this is clearly a different picture, much different, right? We're nowhere near the 50 SMA. As a matter of fact, we're still consolidating up here towards the highs. So there's a clear rotation out of things like your, builders, utilities, energy, financials even, and into tech again. So what this is signaling to me, this little inside consolidation bar, is that we're just going to play it exactly as it lies. Either take out the high or take out the low for your next targets. If we take out the high, and we'll talk about this first because, this does strike me as slightly more bullish than bearish. If we take out the high, blue sky levels, whole and half dollars, intraday levels that form. Obviously, 350 makes a nice round number and whole dollar target to the upside. But after that, blue sky levels will be in play. The low of Thursday is going to be at 339.92. So just call it sort of that 340-ish area. If we were to take that out on strength, I would just target the bottom end of this overall range here, which is at 335. That also coincides with sort of the breakout point from in here. It would be ideal to hold that as support, especially with the 50 SMA there now. One thing I will mention is that there is a very short-term trend line, right? Something like this that could be drawn. And of course, if you take that out, again, that's probably another signal that we do go lower. If we consolidate sideways through time and break it sideways through time, that would strike me as more bullish than bearish. And I wouldn't necessarily be looking out for that massive flush to the downside all the way to 335. Again, that's going to sort of cover it here in the Qs. It does look more bullish than bearish. We have the 50 SMA. Underneath that, again, probably looking at this low in here because that would be, nearly a 100% retracement of this overall breakout, right? Something like this would be bearish. And of course, I would assume we go to that low there set at 328.31. There is no overhead supply issue here on the Qs like there was in SPY. And, again, just looking for this inside bar to play out either over the high or under the low. And last but not least, we have IWM Russell 2000 and our small caps. And this was a huge failed breakout of this overall wedge that we've been monitoring for quite some time now. And I would say as it sits right now, it's in no trade zone, right? We've talked about this in the past, that there's probably a zone that looks like this, about 227 here down to about 217.50, where it's just not ideal to be trading it. Look at all the chop that we've experienced in here in the past, really directionless, and we're trading back into this range now. We're tangled up with the 50 large upper wick there. We did repair this gap, so there's some cleaning up that we can do, right? Let's remove these price levels, and we'll leave, no, actually, let's just get rid of both of them. This line here at 222.50 is more important. It's just not an area where I see clear direction. Obviously, the failed breakout would lead me to believe more bearish, but as we've seen in the past, there's nothing saying that it can't necessarily bounce from any point in here, do something like this. So to me, just not something that I'm favoring in this area. It's signaling more sideways and neutral action, to be honest. So a major divergence here between what's been going on in IWM, failed breakout, moving back into the range, QQQ holding higher, right? Looking like it could potentially move in the bullish direction, and SPY failing back down, failed break after the all-time high retest and repair. So big divergence in the marketplace. IWM certainly not something that I would be focusing on for potential trades, and rather just monitoring for direction. If you've made it to this point in the video, I'm sure you're enjoying the analysis. Hit the thumbs up button and subscribe to the channel so you know every single time a new video comes out. So getting right into Apple here, you can clearly see that we're consolidating into this symmetrical triangle. A lot of other traders are watching this as well. I'm not claiming to be some sort of a genius trader here, but the more eyes that are on the pattern, the stronger the breakout should be, right? The more the same people are expecting the same reaction. There is a specific way I would encourage you to watch this pattern, though. I wouldn't really take the break here on the first go around on that resistance trendline. Instead, what I would want to see happen is some sort of higher low form and then the break, something like this, without necessarily testing the lower support trendline. That would be ideal to me. Obviously, taking out the high from in here would be your entry over 132.50-ish to target 135, which is obviously the top end of this consolidation here. This high is a bump in the road at 137, and then technically I do think there's a much stronger resistance at 138 the whole dollar, which could be your next upside target. To the downside, let's just talk about this because we do have technically an inside bar printing on Friday from Thursday, right? If we take out Thursday's low, you're just looking to trade towards Wednesday's low, the low wick here, which is right around 128.50. Now, I would expect some strong support to come in here because if this chart is making forward and upward progress, you do not want to travel back down into areas of consolidation and chop, right? That would be negative progress. So 128 is kind of the line in the sand here this week for Apple. Moving over to Netflix now, this one still looks to me more bearish than bullish. It's just not one that I would have an easy time going long on, simply because if we look at all this consolidation, right, it's just very visually lower and lower every single time. So although there were certainly some nice green days in here, it's harder for me to go long on something that's just exhibiting weakness on the daily time frame. One potential entry could be over this kind of resistance trend line that's in play. It's coinciding with the 50 SMA right now to fill up the triangle, if you will, to the top here at 514 the whole dollar, and then potentially the bottom of the gap at 518.50. After that, again, just monitor for continuation into the gap, probably playing whole and half dollar levels as we move into that territory. But as the chart currently sits, again, I'm not really anticipating that. Maybe, just maybe, some bullish action here with the sort of acceptance and rotation back into tech and Qs. But for now, sort of bias, just neutral, sideways, slightly lower. Upper wick was put in on Friday. Some consolidation areas to pay attention to. Obviously, if we just clean this up a bit, I would say this area here at 493 is no longer really being respected. It's really slightly lower here, probably closer to 489.50. That would be an area I would want to pay attention to if we were to take that out to the downside. Again, just trade back down towards those lows. Sorry, that was 487.30, the lows from in here. Trade back down towards the double bottom lows and flush point at 478.13. If it breaks, 465.59. But as it sits, sideways is probably the likely direction with the strength in the Qs. Tesla looking okay here. One thing I want to point out about this is it is starting to form a bit of a pressure cooker top here at 630.50. We have broken both resistance trend lines sideways through time, not really with a huge buy reaction, but they're not really in play anymore, so we'll clean that up. And one thing, of course, you could draw in is an ascending triangle. So something like this, you take out the top in here, we call that a pressure cooker top, and the first target is obviously the 50 SMA, which is currently trading at 648.50. Anything after that, your target is here, 667.53. This pattern's actually starting to look better and better as we continually put in these higher lows, right? So as that continues, I would be bullish here on Tesla on the break of 630 for a nice continuation move higher. To the downside, if we give up the support trend line, depending on time of week, right, you could fill up the triangle here to 595.62. Anything underneath probably puts the gap in play 571 down to about 566.71. So Alibaba, although it did repair many gaps that we've had in this chart, it's still on this bearish trend, obviously following it very, very closely here the past couple of weeks, starting to form a little bit of an indecision bar at the resistance trend line. So I would be partial first to the downside, taking the short underneath this support in here. Let's just map that area out. It's just underneath this 208.50. I would be looking for the short. Again, that would be the rollover off of the resistance trend line to target down here 204.27 quarter, just about, and then anything underneath is our 196.57 with 200 psychological in the middle there. Because it is an indecision candle though, and the upper wick did pierce it, I would maybe be thinking that we could break it sideways through time, something like this, and on any rotations higher, you're just looking for resistance at 215.36. If we trade above that area, I would expect chop, right? Again, think of all the sort of people in here who have stop losses, people who want to see it go lower. They're going to be reshorting just because the trend here is so strong to the downside. 50 SMA would be your next target after that, probably around 220 if it happens in the upcoming week of trade. So Facebook, although it did have a red day on Friday, this to me looks stronger than, things like Netflix, for example. So to me, this is something that I would be keeping an eye on for the long if the Qs continue to get some love. We're going to adjust this support lower a bit, not focus on that high so much, and rather the most recent lows, right? So that's at 329.15. If it breaks, just looking for that support trendline touch. We've talked about this in the past. Probably going to be a buy there, right? If we do touch that area, just for the first touch, looking for that intraday buy reaction, and then evaluate after that if we could go higher or not. Obviously, the break to blue sky territories is really above 337.50, as opposed to cherry picking that all-time high there at 339.92, 340 call it, but after that, blue sky levels, whole and half dollars, intraday levels that do form. If we break the support trend line, let's say there's a major market, reaction to the downside, Qs don't get that love and rotation that we're expecting. Your target here would be first here, right? 314.90, 315 call it, because that was a breakout area from in here. Look, boom, that's where we got the breakout from. And after that, the lows of that first pullback at 300 psychological, but really 297.42. So NVIDIA, my goodness, I don't even really have words for this chart. It's just been an absolute monster moving up into these all-time highs. Obviously, with the split coming up, maybe people are trying to get it before that. I don't really know. But what I do know is that we are seeing an inverted hammer print after a pretty impressive move up with very little pullback. So I'm watching very, very closely for that pullback, right? I don't want to try to time the short and really get in before I need to. But, there is some room to move lower here in NVIDIA on the pullback. I would say the first target's here, 721.30, prior sort of breakout high from this day on Thursday. After that, you're looking at consolidation lows and prior breakout high in here, 706.88. So, although I'm not just going to jump in blind and look for the short, but maybe if we take out that Friday low, I just look for the move through this very, emotional buy side day to move back towards that breakout point. I'm not saying it has to go lower here. We know that it's never just a good idea to blindly short stocks at all-time highs, but that's one potential setup. The other thing to do, if you are more of a trend player, you don't like to go short, maybe you just wait for the pullback to happen, right? If you wait for the pullback, this is potentially a buy here for a first touch bounce, or maybe you want to be conservative and look for the buy here, as we just discussed. Those are critical levels. After that, you have this one, 688.37. One thing I will want to do on a chart like this is also break out the Fibonacci's and just see where that 38.2 is, right? If we do something like this, measure up to here, almost nail on with that level we just discussed. The 38.2 is close to that 688.37, 685. It looks like the whole dollar is slightly where that area is. That could be a potential, way more conservative first touch buy for something like that. Moving over to Microsoft now, you can see that we did fill this upside gap, but these are acting as areas of support and resistance. So after the video, I'll just turn them gray. What we need to look for now is, just like strength in the rest of the market, is this sort of inside bar / consolidation at the highs going to result in higher prices or more of a pullback? So your key break is obviously over the 2-day highs in here. It's just below those all-time highs. So maybe you're just looking for the move over the all-time highs, right? You're skeptical here. You're not going to take this baby little short there and rather wait for that break there for blue sky territories, whole and half dollars, intraday levels that do form. To the downside, if this inverted hammer does not hold up here, consolidating over the 50% mark of that bar, then you're just looking for the flush under Friday's low to potentially revisit Thursday's low, right? That would be the bottom end of the inside bar. After that, you're looking for support, super support actually, 50 SMA coinciding at 252.86. And remember, that is the breakout area. And just like the Qs, that would be the area that you want to see hold. This is actually more similar to the XLK chart. We've talked about this in the midweek market update, but that would be the pullback area to hold on any sort of downside activity. If it doesn't hold, gap fill is in play from 247.59 down to 246.37. And last but not least, the beast, we have Amazon. And I'm leaving this one intentionally zoomed out here for a minute because I want you to see that we could potentially be moving out of this overall range that we've been trading in for, almost a full year now. So could this be the move up and out of it? Sure, it could be. But again, based on the activity that's happening here, you never want to buy the breakout if, you're coming up from, this area. The buyers have already put in a significant amount of effort to get to where we're at. You usually want to look for the pullback higher low to form and then take it on this second attempt there. So to me, watching Amazon for any potential signs of weakness for pullback, ideally we hold this 34.30 area of resistance, prior high. That should act as newfound support, something like that. Sure, go with that break there. And again, for this one here, I would want to see another sort of pullback, maybe something like this. Maybe it's more shallow, something like that, but just some sort of, break for the buyers before they take it up and into blue sky territory. So that's the bullish scenario here in Amazon. Obviously, your break above the 3508 area is going to be bullish into the upcoming week. Close underneath this 3447 or 74, and I would look for that pullback to fulfill all the way to that area just discussed. Any moves underneath that, not ideal here. Potential to come back to the 50 SMA. Next major area of support you can see is all the way down at 3309. Call it 3300 just about. And let's throw our fibs on here as well. Just like NVIDIA, this run has been really impressive. So a 38.2 pullback, just to give you an idea of where that would be, because that's also considered a healthy pullback, right? Is at 3378. That would look, again, something like this for that. Okay, so potential ways to play Amazon here. It does look more bullish than bearish to me, especially happening on this increase in volume. Quick reminder to hit that thumbs up button and subscribe to the channel if you've not done so already and you're enjoying the video. First trade idea is going to be on AT&T, and what I like about it is we're forming a hammer right off of this historical area of support after suffering a pretty severe gap down and new trend lower. So if we can take out Friday's high, we're just looking to revisit this area of resistance here at 29.31. It also is coinciding with that 200 SMA, which I like as a first potential target. Look to book profits aggressively here if we do get this trade. If you do hold a small piece for continuation higher, your next target would be up here at the bottom of the gap, really closer to that 30 quarter mark. I would not be interested in this trade if we trade underneath the 28 whole dollar. You can see from in here, this is really a support zone, right? If we do something like this, any violation of that 28 would take this off the table, and ideally this hammer has to hold up into the earlier part of the week. The next trade idea is going to be on AMD, and this one we actually caught in the Discord as a group. Fantastic trade there on Thursday. We were watching this area of consolidation, and we pretty much took out the consolidation highs here up around 82.50 and, saw a nice breakout. We are now forming an inside bar in the upper third of that breakout range, holding the 200 SMA, so it looks good for a potential continuation higher, especially with the Qs and overall tech sector looking good as well. The first target would be up here, closer to 89 the whole dollar, and then monitor for continuation. I would not be interested in the trade if we start to trade underneath that 82.50 and back into this overall range of consolidation. Next idea is on CLF. This one had a pretty nasty end of the week. If we just zoom in a bit here, though, what you'll notice as this chart loads is we are forming a super support, 50 SMA and support trend line, and coming in for a first touch after setting a new higher high, which generally this always should be some sort of buy, right? Your risk is very minimal. Stop loss goes just underneath here. You are technically trying to catch a falling knife, but the risk to reward makes it worth it. To the upside, your target would be probably this area of resistance around 22. It was prior support, right? Support, 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 and then resisted slightly there on Friday. So that would be the first upside target in my opinion. Hold on to a piece, see if we can maybe make it up to those highs, but really, trail your stop up higher and aggressively if we do get that first, dead cat bounce initially off of the super support. Next up is MU. This one again is looking slightly bearish in my opinion, even though it is part of that tech sector, which we discussed having some strength. What I don't like about it is that we have this area of support, right? And we're forming lower highs into it, right? So lower high, lower high, lower high. If this can get a little bit of consolidation like this and retest once again in a short proximity of time, the target here is just the 200 SMA, which as it sits now is at 73.35. I would not be interested in the short if, we reattempt this. And do something like this and take out any sort of neckline that we form, right? That would really invalidate the short-sided trade. And in that case, you could potentially look at it long at the resistance trend line. That would be your target up there, close to the 50 SMA, depending on time of week. Keep in mind earnings on this particular setup. Next up, we have CSCO. And this one is another support trend line touch. Again, aggressive sell-side activity in the entire week, really. High volume on Friday due to the quad witching. But if we draw in a support trend line like this, you'll notice we're slamming right into it, violated the 50 SMA, looking for a potential dead cat here, honestly, given that the uptrend is pretty strong and we have seen some pretty, quote-unquote oversold conditions. So the first target to the upside would, of course, be Friday's high. Anything above that, you're looking for the gap to fill at 53 the whole dollar. Really not a whole lot of meat on the bone here, but if we get any sort of reversal higher early on in the day or potentially form something like this on Monday, you're just looking for the long over Friday's or Monday's high in that case to potentially come up and fill fill the gap. Not interested in this trade if we don't see any sort of reversal patterns happening either intraday or a hammer forming early on in the week. Next up, we have SWBI for Smith & Wesson, and this obviously gun manufacturer, huge breakout on Friday, huge volume on Friday, earnings that day as well. So to me, it just looks for like a potential catalyst play higher, right? Very, very simple, looking for this momentum to continue up and over this sort of high area of resistance in here, 23.52, any sort of move above, just looking at blue sky levels, $1.50 intraday levels that form. Obviously 25 will be a target that a lot of people have their eyes on, so keep that in mind. Not interested in this trade if we start to close underneath, if I zoom in here a bit, our 38.2 fib on Friday's candle. So there it is. We'll do something like this. And we are just looking to hold up above basically our 22.52 area. So, bull flag could be put in early on in the week like this. Boom, take the break there over that sort of all-time high as just discussed. Next up, we have COP, ConocoPhillips. And this one is actually a short trade idea in which we're looking for a breakdown here to really revisit this area of what I would imagine has to be high volume, right? This is going to act as a magnet, this zone in here. 50 SMA is there as well. I like it short even though we have this aggressive sell here because of the upper wick that was put in on Friday. We filled the gap and reversed off of the gap fill and actually closed really weak at this area here. So to me, it would make sense that we probably go lower to that 50 SMA. Not interested if we can't break down below Friday's low, obviously. Next trade is going to be on FUBO. This one is a very simple daily bull flag, right? If we just zoom in a bit here and expand the chart, there we go. We're just looking at something like this, right? So here's your flagpole, there's your area of consolidation, looking for a move up and out of it, something like that. So you could either take the conservative trade, watching for the break, on the tool there, watching for the break over these highs here at 31.55, or you could take the more aggressive trade, which is going with the trendline break, something that looks like this. If we could get that click, something like that, taking the break of that resistance trendline could also be a potential entry, and you would lose interest in this trade if we break down below the flag lows, which are at about 27.31. Upside targets here, firstly, is going to be here at 34.85. Anything after that, I would watch for this area in here, close to that 39.88, 40 whole dollar. Next up, we have HAL. And again, this one is sort of a culprit for being a dead cat bounce candidate. And this one is different than what we looked at on ConocoPhillips simply because we are already at that 50 SMA and this sort of high volume node, right? We have prior support, which was also resistance in here. We're slamming into it. I would just be looking for the dead cat bounce over Friday's high, essentially, for a small move higher, right? Not looking for a whole lot. Probably take profits at about 23, which is about mid-range of that red selling candle. Also retesting that prior area of support as resistance. Again, dead cat bounce has to be a right or right out trade. If it trades anything underneath Friday's low, you have to bail on it because there is potential for it to come down and potentially revisit here or maybe this consolidation low from in here. Next up, we have SPCE, another daily bull flag, sort of just like what we had on FUBO. Your entry on this one, again, is going to be over the highs if you're conservative at 38.50 or over the resistance trendline, which could look something like this. The place that would invalidate this trade is trading underneath our 34.50 mark. Lose interest underneath that consolidation low from the daily bull flag. Targets on this one to the upside, if we just zoom back out for a moment, are going to be up here. First target very close and overhead actually here at 39.80. Anything after that, you're looking up here towards that 46.80. Last trade idea here is on low. And low is sort of one of these things that you're just going to keep on your radar. Obviously, with lumber coming down in the most recent last couple of days, that's been acting on, Lowe's and Home Depot as well. But with these 3 days lining up with precisely equal lows at 184.62, any sort of revisit of that area should break it, right? So although we did have a green day on Friday and there is potential for a move higher here, I would, and keep this on your radar, maybe set an alert at 185, something like that. If Lowe's gets back into that area, I am looking for the flush to potentially come back down and retest 200 SMA eventually. Probably first trade target here, if you're watching intraday, would be around 179, 180 as that was prior resistance and then turns to support in here. So those are 11 trade ideas. I know it was kind of a lot. Some are more bullish than bearish. Some are more bearish than bullish. Pick the ones you like to see. Obviously, you want to go with the direction of the broad market. If you enjoyed today's video or learned anything new, let me know down below in the comment section or by simply leaving the video a thumbs up. And with that being said, I wish you all a green trading week.